All right, so we're riding out the remainder of the conference here, and I'm hoping that we can keep this exciting enough that everyone doesn't nod off or decide to sneak out the back. We're going to make this as exciting as possible. The title of this session is "What is the Future of Money?" It seems to limit us to CBDC, stablecoins, and tokenized deposits, but I would encourage the panelists to think more broadly. When I say that, I'm thinking that we have subclasses of stablecoins like what the IMF calls synthetic CBDC, which are stablecoins backed by central bank deposits. And then we have interesting initiatives like Brazil's PIX, which is a interbank payment system that's run by the central bank, which is an alternative to a retail CBDC. So before jumping in with some questions, I'm just going to run through some introductions here. First of all, I'm John Kiff, and many of you who know me as the Kiffmeister. That's my nom de plume in social media. I'm the research director at the Sovereign Official Digital Association, or SODA, head of the CBDC Digital Capital Markets Advisory at Satoshi Capital Advisors, which focuses mainly on wholesale applications to capital markets. Until 2021, I spent 41 years working in the public sector, 25 of those at the Bank of Canada and 16 at the IMF. Most of the time, I think the theme to my career has been financial innovation, so I like to go wherever cool and new things are happening, especially when they involve technology. Since about 2012 at the IMF, I was focused on fintech, and then since 2016, and this goes right to today, central bank digital currencies have been pretty much my whole life. So I'm looking forward to sort of broadening out a little bit in this session. And then to my immediate right, is Philip Hartmannsgruber. He's been immersed, kind of like my story, since 2016 in crypto, blockchain world, and now he's made his hobby into his profession. He's an expert in topics around digital money and digital assets. He works for the German Savings Bank Association, which is the umbrella organization of the Savings Banks Finance Group, or Sparkassen Finsen Group, with 50 million customers in Germany. It is one of the biggest banks in Europe. Philip leads the Digital Euro team and represents the Sparkassen Finsen Group in national and European committees. And then to his left, we have Ernesto Troiano, who manages research and innovation projects at the innovation unit of GFT Italia. He has a master's in electronic engineering from the University of Genoa and more than 35 years experience in many different business sectors. He's founded fintech, security, digital communication, and intelligent transport system companies in Italy and Netherlands. Ernesto specializes in large software applications involving big data, AI, blockchain, IoT, Internet of Things, and technologies. And so he's quite a renaissance man, as you can see. He's touched on a lot of different topics. Kate, who you see up on the screen there, is the financial sector expert at the IMF, my old bailiwick. She focuses on payments and digital currencies. Before joining the IMF, Kate spent 9 years at the National Bank of Ukraine and left as head of innovations in payments, where she was leading the CBDC research project and supervising the development of innovative payment products and regulations. Kate has a master's in international economics from Taras Shevchenko National University in Kiev and has a Cambridge Judge Business School FinTech and Regulatory Innovation certification. She's lectured at the Cambridge Judge Business School, Harvard Kennedy School, and University of Chicago. And then last but not least, we have Nick Wittek, is a partner at Jones Day, where he advises on the structuring, regulation, documentation of structured finance transactions and the use of DLT and blockchain in this field and beyond. He holds a PhD in law from the University of Augsburg, and he's had close to 20 years of experience working on a wide variety of innovative financial products and infrastructures and regulatory issues, including the new German law on electronic securities. He's co-authored articles on securitization, debt loan funds, and blockchain. So he sort of has has a sort of parallel career track to mine, except more legal focused versus mine more policy and technology focus. So we're going to kick off with a kind of a very, very broad question here, and I'm going to aim it at Kate. What will the future digital money landscape look like? What are the main benefits of new forms of money, and what problems will they solve, and how? Kate?
Hi, good afternoon to those in Frankfurt. I hope you can hear me well.
Yep, loud and clear.
Oh, fine, yeah. And good morning, good afternoon, and good evening to those joining online. First of all, I want to thank the Digital Euro Association for organizing this great event, all previous speakers for all the insightful presentations and disclosing their views. Of course, for our distinguished moderator, John, it's always nice to be with you, and all other panelists who are joining us today. And of course, all the participants of the conference. And a short but traditional disclaimer that all views that will be presented and discussed are my personal and expert views and should not be attributed to the IMF, its executive board, or management. So thank you, John, for your question. And regarding digital money landscape and how it will look like. So as we all know that traditionally there used to be two forms of money, public and private. Public was usually cash available for everyone, and banks' reserves held by financial institution at the central bank. On the other hand side, that was a bank's deposit or bank's accounts, which is private form of money available for general public or businesses and held by the commercial institutions, financial institutions or banks. So it might be surprising to know for those out of the central bank or public sector, that the biggest money supplier for general public is not a central bank. It's actually a private sector. And that was the one who was usually on a front line, who was very flexible and reacting for money demand with its supply. Traditionally, money was performing three traditional money functions: medium of exchange, store of value, and unit of account. But recently, during the recent years, we've been experiencing a push from different underlying forces, such as technology, first of all, like DLT or blockchain, but also AI, big data, uptake of big techs, then changes in consumer habits for digital, and of course pandemic that give a big push and drive for digital money. With the very first uptake that was happening in crypto, with development of Bitcoin, even though nowadays we of course cannot call Bitcoin or other forms of crypto money, as they are failing to perform all of those mentioned functions of money, it's still associated with like money functions sometimes and quite often, especially by private sector. At the same time, all these uptakes happening at private sector gave a lot of push to public sector with the development of CBDC, or central bank digital currencies. After that, we were seeing another development of stablecoins, which are more associated with money as being having a more stable nature, being collateralized and more stable. At the same time, it's already a reality that we have all of these happening nowadays with us. Looking from all the perspectives, implementation, adoption, and regulation, nowadays we can say that bigger picture actually extends far beyond each country's border. So basically, digital money revolution will happen and already happening on a global scale, but at the same time on a very uneven and synchronized way at the same time. So what I personally can see that emerging markets and low-income countries will be affected and already affected much more by introducing an introduction of digital form of money, both public and private, in a larger and bigger scale than other advanced economies. That was an overview of future of digital money. I believe another sub-question was of benefits of different form of money. Should I go on, or some other speakers want to step in?
No, go ahead, keep going.
Yeah, and if we are talking about digital money advantages, basically for both private and public money, we can associate such advantages as reduction of transactional costs that are coming from both sides, costs and speed, like cost reduction and speed increasing. Accessibility by user-friendly interfaces, by lower cost, Then in integrity of digital services that unlocking opportunities for broader financial services than payments. Of course, global outreach or global reach in a cross-border dimension. Trust increasement that are built by diverse and innovative settings, also led by technological side. And of course, network effect of different participants. All that mentioned could lead to multiple and potential benefits, such as financial inclusion, reduction of cost for business, enhance of cross-border payments, global integration, growth and innovations, basically development of digitalization for countries, and policy efficiency and innovations in this sense. So all these different opportunities could be also looked through the dimension of leveraged and fostering integration and interoperability in payment system. So new solution could be explored, such as some multilateral settlement and exchange platforms. So as well as common norms or principle for the design of digital money to facilitate cross-border payments. So in my point of view, the cross-border payments, and especially those that are covering remittances flow, might be essential, again, especially for those of low income or developing countries. If we are looking with a bigger focus for diverse reasons to consider CBDC, because CBDC is one of the type of digital money in this sense, public digital money. So basically, central banks' goals are usually built around financial inclusion, enhancement of safety, resilience, and market discipline, efficiency of government services, increasement of efficiency, of course, and using as a catalyst for innovation. And for some countries, is still reserving or keeping the right of citizens to keep using central bank money. But as always, what does have opportunities, those have challenges and risks. Those of digital money, the most common are bank disintermediation or risks of financial stability that goes together with bank runs, and it could both come from public and private forms of digital money. Another risk that is coming from innovation, that it could be a disruptor, because based on innovative technology and innovative settings, you never know what you may get. Another dimension is cyber, privacy, data, and integrity risks. Of course, for central banks, we have to consider another risks of monetary policy implementation that could be also affected from both public and private digital currencies. So that was a basic overview from my side. Thank you.
Thanks, Kate. I'm going to turn to Nick now and ask him questions, ask him to address the unique and interesting use cases of new forms of digital money.
Yeah, I want to, first of all, thanks for the invitation and being on the panel. I keep it short and brief. Yeah, I think we spoke about digital money, stablecoins, etc. If you try to see what's actually been happening, is there's a new technology on the horizon. And the previous panel mentioned an important factor. Yeah, money is a neutral form of exchange. But what triggered the stablecoin development was that we had to use money in a new digital format where the traditional commercial bank money was not available. So therefore, stablecoins developed as a substitute. And with the innovation, use of blockchain and DLT technology in the industry, there is a need for, let's say, new technical forms of the same money. It is not a different money we're using, but we can use the same money as before, but in new digital formats in order to enable new technology developments like, Industry 4.0, machine-to-machine payments, Web3, Metaverse. Yeah, everybody thinks we need to create new forms of money. I personally think no, but we need to transfer the existing forms of money into new digital formats to keep it simple. Yeah, and the use cases then come in handy, as they were mentioned before, the machine-to-machine payment to enable cross-border payments, to deploy money on the system of the customers. And that's, you ask yourself, what does a lawyer do on that panel? We have helped our clients to develop the legal framework for that type of creation in various initial use cases. And we try to be helpful in terms of simplifying these concepts of money in the new technology framework. And with that, I give it back to you, John.
Thanks, Nick. I'm going to turn to Philip now because I got a question about tokenized deposits, which was the subject of the last session. So what's your take on that, Philip?
I think we really need it. Like, I think we heard it for 45 minutes. There are a lot of banks working on that topic. I think we will talk later about the digital euro and the retail CBDC, and it is not for companies made, so not for the industry 4.0 with machine-to-machine payments, with payment as a service, etc. And we need a new form of our commercial bank money to address those new use cases. And I think we as banks can do it best. And I think we need different and more kinds of money, like what we have right now: cash, commercial bank money token, retail CBDC, wholesale CBDC, trigger solution, stablecoins, cryptocurrencies. And I think it's great that we live in a time like that with so many types of money. So I think it's really needed.
Thanks, Philip. And Nick, you got any legal thoughts on tokenized deposits?
Yeah, I think I would, it depends on how you look at it. Is it different forms of money? Yes, it's probably different technical forms of money, but most of what we heard, tokenized deposits, this is still a deposit. Yeah, it's still commercial bank money. It just comes in a different technical format. E-money, from a legal perspective, is also a deposit. Yeah, but it's on a lighter regulation. So from a legal perspective, some of these forms of money are all the same, but they are labeled differently. So we try to simplify things, and with that to also help the industry along in order to develop the new technology more quickly. And I think the key question is, how do we solve some of the technical issues that are inherent in, for example, privacy of the unit that is being transferred, redemption of the unit that's being transferred, security in terms of IT security of the unit that is transferred. But legally, it is a lot simpler than what you see in terms of labeling of these types of monies.
Thanks, Nick. Ernesto?
Yes, sure. Well, first of all, I'm apologizing because I have to catch a plane and I will leave very soon. So I will make this presentation and I will leave. So sorry about that. So I had already this introduction, and I'm a senior manager in GFT, which is a system integrator specialized in the financial sector. We help the banking system, the financial institution to move forward the digitalization. This is basically what we do. I belong to the innovation unit, which manage research and innovation project. And I will tell you why it is relevant. This title, Introduce the Project that I am currently managing, is relevant here because we work very closely with the European Commission. We make this project on calls. And recently we have started this project for the Commission, which is about federating marketplace for the embedded finance. This is very relevant for the industries, not only for the banking system, but also for the financial institution, the fintechs, and all the service providers. Now, I will be very brief because I want to get to the point. Now, this is a huge project. In GFT, we have the merit to bring the banking system and the financial sector within the radar of the Commission and the program. So we are working with banks in the innovation field. You know that the banking systems are very conservative when it comes to innovation. And the reason is, well, there are many reasons, but one of the reasons is that innovation comes with high costs, so they have to be very careful when they innovate. The background of the project is basically there are no marketplaces, no data spaces ready available, besides the application used them a lot to provide new services, okay? I will get to the point now, but this application enables new kind of services. So we are looking forward a new kind of services which are enabled by federating marketplaces and providing new business model and new tools. Okay, so this project will allow a federated marketplace, more unified, but also we provide algorithms. So, but I will get to the point now. Part of the project will be developing a platform that provides these assets, okay? The data spaces is a sort of fundamental for building up new application. One of the key things here is that we provide also monetization. And this is relevant for the topic of this conference, but also of the panel. Now, when we think about monetization of the asset, there are schemas and there are trials, but we want to, let's say, provide a set of framework. Now, why is relevant to this conference? Because we, as an observatory in GFT, we have looked very closely to what is happening in the digital era, in the tokenization of money and assets. Now, we envision this sort of a future. We have already spoken about that, some kind of solution. This is very simplistic, okay? Too much. And the reality could be very different from that. Now, what we see as an observatory is that CBDC is going very practically in use cases, okay? What we know from their publicly available document is that they have designed very simple use cases that can be solved via, let's say, providing a digital euro wallet from the euro system and providing this mechanism that you have already heard today. They are very well known. One of them is the offline payment that will be capped. So the central bank looks like they don't want to disrupt anything, right? And this is very clear. They probably will go through the commercial banks in order to have their wallet providing the same feature or more or other feature via their own KYC. So what is configuring now is a strong partnership, at least promoted by the stakeholders, the relevant stakeholders. So the second tier will be the commercial bank providing their features and their capabilities in order to provide services with digitalization and of money with this infrastructure that will we have heard here before is very relevant. So the second tier will be provided by the commercial bank. The central bank will not provide let's say the distributed ledger. They will leave to the commercial bank their own solution. We in GFT have one of the solutions we've developed already, which is called the universal digital payment system. So this solution allows stablecoins and CBDCs to be exchanged or to provide method of payment between CBDCs and other kind of form of coins. Okay, this is basically a sort of SWIFT system, message-based, which allows payment. Universal. It can be one of the solutions in this field. I will be very briefly. But the third level that we foresee, which is very relevant because it enables another set of use cases, is the tokenization of assets. So when we speak about our use cases in the financial embedded finance, you will have this application that provides you services. Think of Uber, think of Starbucks, think of payment system, machine to machine, where your wallet, where the machine wallet communicates with other. This will be enabled by a third level of tokenization, or a third level. Now, in our vision, this tier will be provided in federation and industry alliance. Now, of course, this kind of future is not, let's say, is not there. It's not there. And probably it will be much more fragmented. Every commercial bank will have its own solution. Every service provider will have their own solution. But we have to get there, because let's say the stake is very important. And I want to point out the following thing. The European Union, the European Commission, is ahead of an arms race. The directive, the MiCA directive, other legislation from GDPR, whatever, they settled the ground, the background, to provide these two frameworks in which the payment solution will evolve in order to manage and to enable a large set of use cases. I think this is a unique period in the history of the Union, where these settlements will bring our values and solution to the industry. I've finished. I apologize again. I have to catch a plane. Thank you so much.
Thanks, Ernesto.
Yes, sorry.
All right, turning back to Kate. Got a question for you, Kate. What role should the public sector play in digital money development?
Thank you, John. It's a very interesting question, because public sector may play very diverse and for sure important roles. So traditionally, private sector used to be a regulator or let's say overseer, but sometimes also an owner and operator if it comes, let's say, for cash or bank reserves. But also, like already for quite some decades, it's also became an initiator and coordinator, especially if it comes to not money directly, but to the infrastructure to deliver money, or so-called payment trails. So very similar, I believe, when it comes to digital money. For sure, it will depend on the type of digital money, whether it would be private or public. So whether it would be CBDC or any other form of privately issued digital currency or digital money. So within its like privately issued, it also may vary from jurisdiction to jurisdiction, and it would be no rule for all, no one size fit all. So for sure, it's supposed to be a regulator at some point, an overseer, but sometimes in some jurisdiction, it might be an initiator or coordinator. But when it's come to CBDC, it's becoming even more complicated, and we can see already from existing examples that it may vary so much. So some prefer to be everything. So it basically depends on the model. If it's one tier or direct CBDC or two tier or even sometimes synthetic CBDC. So it's very uneven distribution of function between public and private sector, because public sector could be regulator, owner, operator, an initiator and coordinator, but could be only owner or could be only initiator if it's like, let's say, synthetic CBDC. So that's very, very different. But what I believe is really important for digital money, that there should be regulated in different sense and in different dimension, depending on the type. And here, role of public sector is crucial. So, of course, the regulations in terms of how it's designed to provide all customers like equal access, to ensure monetary policy and financial stability, to keep in the focus foreign exchange regimes. It all supposed to be on the public sector. Also, that payment aspect must be increasingly integrated and not fragmented, so that helps countries to go through this digital divide. Of course, it's much remains to be done, because at the moment it's no clear answer and not really much even often examples that could be taken as a role model. In this sense, there is a careful combination how to build the future. But I personally believe in building like brighter future in a cooperation. First of all, cooperation between public and private sector, which is crucial on all the level, domestic, national level, and international level, globally between different countries, and within support and help of international organizations.
Thanks, Kate. Now, drilling down a little bit, I'm going to have a question for Philip here. Do we need a retail digital euro? And if so, how should it be designed?
I can't answer the question. We as European citizens have to answer that. Like, do we want a digital euro or do we need it? So, show of hands. Who thinks we need a digital euro? 5, 6, 7, 8, 9. Retail. Yeah. Okay. Who thinks we don't need it? Like, it's against privacy and no need, and who is indifferent? Who need?
If my math is correct, not everybody participated.
Okay, but I think, do you see the need for the wholesale CBDC? Yeah, that's good. Okay, so back to the question. I think it is really important how the design of the digital euro is, or will be. Like, we already saw so many design choices by the ECB, and some are good, like offline solution, but I don't know yet how they want to do it. My personal view, not for my bank, I think it should be run on distributed ledger technology, and should be like a base system, base function. I think in the beginning it was called raw material. So the ECB is building the digital euro as a raw material, and the banks are building the business models on top of that. I think that should be the way, but like 2 years ago it was like that, and now after nearly 2 years of the investigation phase, we see where it's going. Like, the ECB is building a scheme, so they are really being competitor for the banks. Maybe. It depends. In the end, I think we will be a lot smarter after the 24th of May with the regulatory next question probably. And then in like October, when they say we go in a 2 to 3 year realization phase. And then it will become clear how the digital euro will be, how it will be run, on what technology, and what we as banks who are the intermediaries, we have to give you the digital euro. What we should build, like, we don't know the technology right now, and in like 2026, the digital euro could be there. And we need like 2 to 3 years to build a new banking system. And I hope we have more clarification at the end of the year. And yeah, I think that's it for the second.
Thanks, Philip. Now, Nick being the resident lawyer here, I'm going to ask him a legal question. And so, would you think that, as one of those design questions, should a digital euro be designated as legal tender? How important is that?
Yeah, I mean, if it's a euro, then it is legal tender, right? I would like to comment on the two previous questions. First of all, I think the public is really important. Yeah, the public sector is really important to set the rules of how we deal with the euro. Secondly, we have already a lot of rules out there, right? We have a euro, and there is a two-tier banking system that works quite well. There is a banking regulation, So maybe it's worthwhile to have a think of whether we are talking about things that we already have. So do we really need to reinvent the wheel? Because sometimes that discussion on retail CBDC, wholesale CBDC reminds me of that we're trying to replicate the existing world that we have in a new digital format. Right? We have central bank money, it's coins and notes. We do have commercial bank money that is sitting on accounts. We have banks that are regulated in order to ensure that those who use commercial bank money, and that is a digital euro, are safeguarded. So there is a lot of rules in place already. And only because somebody threw in the word stablecoin or digital euro, I find that sometimes we're losing track of what we have already and that we can use the existing framework. It's more a question in terms of, and I repeat myself there, technical design. So how do we on a DLT, for example, replicate a kind of anonymous coin euro so that everybody can have it? And how do we replicate commercial bank money on a DLT so that we can transfer it from one account to another? But I think it's important to remember that there is a lot of regulation there that has proven to help, not in all cases as we've seen a couple of weeks ago, but there is already a lot of experience out there, and we don't have to, maybe it's worthwhile to reconsider how we can use that existing framework, and that there is a digital euro already.
Okay, thanks, Nick. I'm not going to let you off the hook that easily, though. The legal tender question is really out there, right? Because the Fabio Panetti himself in his speech said it's not a certainty that we will designate a digital euro as legal tender, although we probably will. So what would be the impact of not designated as legal tender?
I mean, that's a question I've always asked myself when people use stablecoins, right? I mean, in my view, a stablecoin is you give somebody money, you get something in return, a coin, and then later on you come back to him and say, can I get my money back? Can I get my euro back? So I have received something that is like a substitute for my euro. And then what would you do with that, right? Do you go into a car or whatever, into a shop and say, let me buy your goods and I'm paying you with something that is a substitute to the euro? I think we all want to pay with euro. So in my view, if it is a digital euro, then the euro should be legal tender.
And if I can add, it will definitely be legal tender. They already said it's cash in a digital form. Cash is the only legal tender, so it makes no sense to not make it legal tender. The question is, will it be more regulated than cash? So here, if you go to the cafeteria, you can't pay with cash, right? What is in 2027, T? Do they have to accept digital euro there? Probably, because I think they will go further than cash.
Yeah, there's an interesting historical anecdote I would like to add, and maybe that clarifies a lot of things. Until 1914, the only legal tender were the coins. But still we had banknotes. And the banknote simply said, the holder of that banknote is entitled to exchange the amount that's set on the banknote for coins. That was the purpose of the banknote. You had a claim for the coins, for the real money. So until 1914, only coins were real money. And if you think about 1914, so somebody needed a lot of money for war. So what they decided is to simply remove that one line in the law, and out of a sudden, the banknote also became legal tender because they didn't want to exchange it for the silver coins any longer. So if you think about it from that perspective, what is legal tender is what we define as legal tender. And yes, if we use a euro, and it's a digital euro, and in my view, the commercial bank money today is already a digital euro, then it is legal tender.
Okay, so we're going to have one last wrap-up question here. I'm going to turn to Kate to answer this one. Who will win the race between regulated and unregulated money? And I include crypto assets in that contest.
Thank you, John. Absolutely exciting question. And I believe that it would be no winner. I believe in a very diverse market with a number of products, with a number of stakeholders that are fit different demand and different niches. So I believe in diverse at the same time united and hopefully safe for everyone market.
Thanks, Kate. Nick?
Oh, that's pretty simple. It will be the regulated, because if you look at, I mean, there's a lot of people using stablecoins and cryptocurrencies, but that's very little money compared to what's being used by the institutional market players in terms of making transactions. And there's a reason why financial institutions only settle in central bank money. Yeah, because they want the regulated type of currency which has not an intrinsic value, but which is given a value. So for me, it is pretty clear that the regulated piece will win.
Philip?
So on cryptocurrencies, definitely Bitcoin. If we look on CBDC and stablecoins and what else, I would go for AP, European Payments Initiative.
For my answer, I mean, I would like to be able to say that I like the world that Kate described. I think that's the way it should be, but I suspect the way it will be the way that Nick described it. And we see that now with the US. I don't know what you'd call that, but they seem to be attacking the fringes of the whole crypto asset space and so on, and chopping it. It's almost like that scene in Monty Python's Holy Grail, where the knight, they chop the arms off. No, that doesn't work. We'll chop the legs off, and I think that's what we're seeing here. Anyways.
The knight then says, we agree on a tie, right?
Yeah.
No winner.
That's right, yeah. That's a good answer. All right, well, thanks very much for joining us in this last session and sticking with us.